Okay. Well, again, thank you and welcome for coming to the online environment here. We're going to be doing the Building Wealth. This is a partnership between the Federal Reserve Bank of Dallas and the Plano Public Library. It's the Federal Reserve Bank of Dallas's program that they have created a number of years ago. And just want to say up front as a disclaimer that the views expressed do not reflect official positions of the Federal Reserve System or the Plano Public Library. This presentation is for information purposes only. It is not intended to be investment advice. Seek a licensed professional for investment advice. So the housekeeping out of the way. Just want to let y'all know that this is going to be, we're going to take about the next hour and a half to be talking about building wealth and all of the information that's part of this curriculum. My colleague, Alexis, will be providing y'all some links through the chat if y'all wish to access the building wealth materials off the Federal Reserve Bank of Dallas's website. They have a whole host of information, and all of this is freely available, and you can actually request a free printed copy of the Building Wealth guidebook for students, or if you wish, the teacher edition. So the Federal Reserve Bank of Dallas created this resource about 20 years ago because they were seeing that the studies were discovering that there's a lack of personal savings, or that the lack of personal savings and good credit were preventing many people from reaching their goals, whether that being to buy a home, to start a business. There was a need for families to build financial capability and resilience. The studies were showing that financially stable households make for a more stable economy overall. And as a result, they created this Building Wealth. And it's just one resource that the Federal Reserve Bank of Dallas has available to the public. And this works great for anyone from high school age to adults. And it helps everybody of those age groups work towards their being more financially stable. You can find a lot more educational materials at federalreserveeducation.org. Again, we'll post the link into the site, or to the chat rather, sorry. There also are links under the Building Wealth web pages where you can access the guide online, and it's got built-in calculators. And it's really become a really popular resource for the Federal Reserve. So one study that they've highlighted was the Survey of Household Economic Decision Making. And this was a 5th annual survey that was released in May of 2018. And the study showed that 4 in 10 adults, if faced with an unexpected expense of $400, would either not be able to cover it or would cover it by selling something or borrowing money. And this is actually an improvement over half of the adults in 2013, just 5 years earlier, who were being ill prepared for such an expense. And it's still a high number. And it shows a weakness, general weakness in our economy. So over 1/5 of the adults are not able to pay all of the current month's bills in full. Now, a lot of this data obviously comes from a few years ago. That doesn't take into account our current situation the world finds itself in. So I'm sure that has really changed some numbers and gotten a lot of people self-reflecting on their own finances and reflecting on their own plans. So part of the Building Wealth program is really sets some really foundational information that all of us can think about. It's all about trying to manage one's finances because those are complex. They're complex challenges, even in the best of times, not during our current 2020 that we find ourselves in. So it requires a combination of skills, judgment, resources, and above all, patience. And that's more than ever something that we need today. So individuals and families are grappling with an amazing variety of financial decisions on a daily basis. So with building wealth, it covers some of the basics. It covers setting goals, budgeting, saving and investing, building credit and controlling debt, and protecting your wealth. And the city of Plano has done some amazing things over the years. And just in 2019, the U.S. Conference of Mayors awarded the city of Plano the first place for the 2019 City Livability Award for large cities. And that was a good prominent role was played by the Plano Public Library in doing ongoing programs and initiatives to help support financial literacy. And so we always have a number of courses throughout the year. Each season, we try to have something to help support and educate the public in improving their financial capability. So today, with our learning objectives, we're going to define some basic financial terms, and we're just really taking some basic approach here, some foundational things, as I said. We're going to identify how budgets help you reach your goals and apply the knowledge in a practical exercise. We're going to discover how financial foundation helps you save and invest in your future. Hopefully we'll get to identify some steps to building credit and controlling debt and analyze how to protect your wealth. So what does financial capability really mean? Anybody have some thoughts, some short answers? Or just you can sit quietly and self-reflect, but think, what does financial capability really mean? It can mean a lot to a lot of different people, right? It's a personal measure. Should we be doing this class face-to-face? Part of the curriculum set has information. It has 6 characters that the Federal Reserve have created, 6 personas that are across a number of walks of life and age group, ethnic backgrounds, socioeconomic backgrounds, just kind of samples of the people in the community that I think just about any of us can identify at least one or more with some aspect of these different characters. Unfortunately, don't get to share that, but we at least get to reflect on some of this information. So financial capability is having the knowledge and the tools to manage your money. We're not teaching just financial information just to check it off of a box. These materials will help you make positive changes in your life. Just simple steps. But financial education is nothing without behavioral change, just small changes to behavior. So putting action to your dreams is what makes your reality. Don't get overwhelmed with the big picture. Small changes can lead to big results. Focus on a few changes that you can make this year. And you've probably already made some changes with 2020, I'm sure. I know I have. Then you just add a few more changes on top of that the next year, and you build from there. So the last 6 months, I have not eaten out on a daily basis like I had before. And it's amazing how much money I have saved. It's kind of scary how much money was going down into fast food. Just those simple self-reflections can lead to big results by simply not eating out fast food quite as much. And that's a good approach, and that's what we're talking about with the building wealth. So a very important initial step is to ask yourself a question: what does wealth mean to you? That's for you. What does it mean to you? Some people might define wealth as being able to live in an expensive house and travel around the world. Some of us might just want to be able to save up for a college fund for our kids. Or we might want to have peace of mind that we don't have to worry about our finances should we reach retirement. Oh, that was kind of morbid sounding. When we reach retirement, instead of always worrying about money, we want to be able to have money for a down payment on our dream home or our first home. It's totally based on everyone's own personal values and life experiences. So hopefully you've taken a moment while I was talking to really think on that question. What does building wealth mean to you? Does anybody want to share a brief answer? I know it's difficult for people, especially adults, to talk about financial information, and it doesn't have to be personally identifying. You don't have to personally, but I think a lot of things are universal. We might be able to, or might want to be able to pay for retirement. We want to have fewer bills to have to pay each month. So I see some of the responses popping in. Alexis, would you like to share with me, because I can't see?
Yes, it looks like debt-free is one of them, financial security and retirement, being able to retire comfortably without worry, and then another retirement.
Yeah, exactly. Yeah, those are big things that everybody is thinking about more than ever these days, right? So now that you've defined what wealth means to you, how do you acquire it? So with chapter 1, we're going to learn the language. And they have a quote from the authors of The Millionaire Next Door here on this slide it's really something to think about. If you make a good income each year and spend it all, you're not getting wealthier. You are just living high. What did I just reveal about myself? I was eating out every day, fast food. It's convenient, right? But in the last, as of end of March and April, with the world changes, I wasn't doing that. And it was surprising how much money I was saving. It was surprising to acknowledge, and almost disappointed myself how much I was spending and I didn't realize it. So with chapter 1, learning the language, we're going to be talking about some of the basics of understanding the language. It's real simple. The first lesson is to understand the meaning of assets, liabilities, and net worth. So if we were in a face-to-face class, about this point, you'd meet Anthony. And in fact, this is Anthony on this slide here. And Anthony has realized that at the rate he's going, there's not going to be enough money to meet his family's financial goals. So he starts learning the language and learning a simple formula. Assets minus liabilities equals net worth. So An asset is anything an individual or business owns that has commercial or exchange value. So an example would be your retirement plan, any stocks or bonds that you might have, a house. Your liabilities are your debts. That's what you owe. So that might be your home mortgage, your credit card balances, a car loan, student loans, medical bills, any number of things. And then your net worth is simply your assets minus your liabilities, the excess of assets over your liabilities. So after you've paid all your bills, what you have left, hopefully, is in the positive. That's your net worth after all of that. So a simple example is with home equity. And in this really basic mathematical example, I think we would all probably like a house to be only $120,000 again. The market value of a home is an asset. The mortgage is the liability. So in this example, the house is worth $120,000. The mortgage is $80,000. That means that your equity in the home is $40,000. Equity contributes to your net worth. So you take your asset minus your liability, and that equals your net worth. So your net worth in this home equity is $40,000. Pretty simple, right? Okay. So Anthony starts to look at his finances, and he creates a balance sheet. And you see it, hopefully you can see this pretty clearly. So he's starting to look at what his expenses are. And he's looking towards reaching, he's thinking of what his goals are, and he's thinking about how he's going to reach them. And if you want, you could doodle around as an exercise now while I'm talking, or do this later. You could do one of these yourself. You're looking at what do you have? What are your assets? And make your own little chart in your exercise to see kind of quickly, what are my goals? And what do I have? What's my net worth currently? And if you access the online guide through the Federal Reserve Bank, they have built-in calculators, so you can do a lot of this online. And it's really useful, helpful tools. And a lot of that is located on the www.buildingwealth.org. And again, we'll put that link in the chat, or I'm sure we've already done that. Sorry, I can't see the chats. But remember, your net worth is your wealth. So with chapter 2, budgeting to save. And as Eleanor Roosevelt says here, it takes as much energy to wish as it does to plan. So we start chapter 2 by setting some financial goals. In this section, we'll demonstrate how you can budget in order to save. And it's not something you generally do overnight. You know, a lot of the wealthy got wealthy by setting goals and pushing themselves to reach those goals. Setting financial goals can help you when it comes to setting a budget and saving for your future. Your goals are the why you're making a budget and you're sticking to it. And if you have a strong why, that'll help you when it comes time to make those small day-to-day decisions. Like, now I realize how much money I've been spending on eating out, fast food. I'm now motivated and have a strong motivation to not continue that path and save more money to reach goals that I didn't think I was going to be able to reach in the time that I'm looking to reach them. So in this character shown here is Vince. He's one of our fun characters. We're going to go back to Anthony. And one of the information on the cards basically outlines all of what Anthony's kind of goals, short-term goals, long-term goals. And for Anthony's character, he set a goal to add $500 to an emergency fund for this year in his short-term goal. His long-term goal, he wants to save for a down payment on a home, save for college for his kids, and save for his retirement. And this is an example of one of the forms that's provided in the Federal Reserve Bank of Dallas's curriculum. And they have this online as well. Or you could just make a list yourself. Write down a couple of your short-term goals. What do you want to do in the short term? Just think about those. Short-term examples could be, I want to pay my bills on time each month. I want to put money towards my rainy day fund, as the example of Anthony, where he wants to add $500 to his emergency fund within this year. Long-term example, you want to pay off your car and be debt-free in 5 years. Another long-term example, you may want to save and put a substantial down payment on your first home. It's okay if you can't think of anything while in the class. You'll figure it out as you're going through the budgeting process, but the main thing is start thinking about it and actually write them down. I just keep thinking about it, but once it's kind of a moment where you make your list and you see it in print, that it somehow kind of becomes tangible and real, and this is what you've decided, this is what you've settled on. It's kind of a funny thing, but it works. So next we're going to be talking about some of the strategies to meet your goals. And we meet Gabby. Now Gabby has got a really good job. And Gabby thinks she's doing pretty well. And she has a pretty good income. And she managed to spend it all and then some. And as their funny little graphic here shows, you can see she's got shopping receipts flowing out of her shopping bags. She's got a latte or something in her hand. She's listening to iTunes, or maybe she's buying e-audio books when she could check them out for free from the library, just saying. So she's really living from paycheck to paycheck. She's spending everything she's got. She's living life. She's living high. And then with Sonya, one of the characters that we meet, Sonya's a single mom with a son. She is the CEO of her life. And she makes her money work for her, not the other way around. She's saving. She feels confident that she has control of her future. She budgets in order to live on her modest income. She doesn't make as much as Gabby does. Saving is very important to her. And Sonya makes, less than Gabby, as I mentioned, but she's actually wealthier. Sonya has a higher net worth than Gabby because she's saving and she's investing and she's not spending all of her money. So when it comes to reaching your financial goals, are you doing or are you wishing? I'll be honest, sometimes I waffle between both. I think we all do. I know my wife is fond of reminding me, the difference is the doers put action to their goals. The doers are much more likely to reach your goals and achieve their dreams. If you're a doer, you're more likely to track your spending, live within your means, stick to a budget, pay off your credit cards in a timely fashion, deposit money into a savings account each month, and make regular contributions to a retirement savings. So following Sonia's example, Gabby will start tracking her money. She'll set up a budget and she'll make some small changes to begin to save, as David's doing here. David has started to track his daily spending, his day-to-day spending. It's a very, very important first step in creating an accurate budget. And it's the only way to really learn where your money is going. So in David's list here, he includes purchases made with cash, debit card, check, or charge, credit. And these days we got to also add money that we spend on, in things like Venmo and PayPal, Apple Pay, and things of that nature as well, right? But right now, most of you can write down your monthly bills, such as your house payment or your rent, your car payment, your wireless bill, utilities. You generally know from month to month what those major things are, right? For the most part, depending on the season, right? And you probably know what your take home is every month. So we have these income and expense numbers right off the top of our heads. But it's still not really a true budget. You have to track your spending. This is where it gets a little tricky, in that making yourself, it's almost like New Year's resolutions that you hardly ever act upon. You've got to get past that and not think of them as New Year's resolutions and actually start tracking your spending. Just small steps, small steps. So you could create a spreadsheet, or you could use an app. There are many apps out there where you can enter in your expenditures on a daily basis, or you could just keep a small notebook. There's also apps for that, note apps, right? The trick is to write down everything, even if it costs you 25 cents out of a vending machine, write it down. And you only have to do this for a month or two to see where your money is going. You don't want to say, I'm going to track this for 6 months. Small steps. Do it for 2 weeks. Do it for an entire month. Then 2 months, just to see where everything is going. Then you'll be able to really start to see the categories that you're spending money in. Then you'll be able to really start working on your budget. And Gabby here has started working on hers. She's got a column where she has her current income and her current expenses. She has a column for income changes and her new budget. And so she's listed out everything. She's listed out all her assets. She's listed out all her liabilities, everything she's owes, bills, things, right? Income's on the top, expenses at the bottom, and divided into 3 categories along the columns, as I mentioned. And then she totals everything out. And then after tracking her day-to-day expenses, she realizes she's actually spending more than she's bringing in. Can you see that at the bottom of that first column? She's not building wealth, she's building debt every month to the tune of $85. If she tracks and spends like this every month, she's losing $85 each month.
Your mask securely over your nose and mouth and maintain social distancing. We are all in this together.
Sorry about that announcement coming over. So she starts to think, and she makes some small changes to her lifestyle and looking towards building wealth now. So in that middle column, income changes. She increases her income by starting to get a little extra overtime at work, and that adds $40 per month. she decides further down the chart, some of her expenses, she decides that the premium cable TV, she's spending too much for. So she's also, cutting back on clothing expenditures and some of her running around money, some of her gas money. Maybe she quit driving as much and wandering around driving to stores. She's going to stop eating out, cutting back on her entertainment and some of her miscellaneous expenses. So now she's able to develop a new budget. And with this new budget and her extra income and the cuts that she has made, she's able to save $125 a month. So that's a budget she can live with. Each month she has $125. Now, looking at this, does anybody think there's any other places that Gabby can cut back on and save some money? Probably a few things, right? Depending on where she lives, these expenses are going to be much higher or lower. Who knows? It's really going to depend on location. But the key is she's sat down, tracked her expenses, made some personal choices, some sacrifices to reach her goal. And that's to build wealth, to save some money. And now she's worked a budget that now she can follow. Hopefully stay with it, right? As a quick example, a real world example. This is an actual example, by the way. Name has been changed to protect the person. This is a budget from someone who lives and works in Plano. The individual is single and lives in a one-bedroom apartment by herself. And she makes about $16 an hour. And these are her actual living expenditures. And since doing her budget, she had realized that she needs to make a little more money. So she's working overtime when she can. And she's creating digital content for friends to make additional money on the side. So she has a skill that she can also bring to the table and kind of moonlight and do some jobs outside of her normal work that can earn her additional income. So in her budget, much like Gabby's, she studied her budget. She decided to find a less expensive apartment. She decided she needed only one TV provider, so she dropped the Hulu. She decided she needed to spend not as much on clothing. And she decided she could probably figure out a way to entertain herself less. And besides, she kind of figures she'd be a little busier with the extra job and the overtime work that she was doing. So a lot of small changes can add up to reaching your goals. So in the current expenses, you can see coming out $7 a head each month, $7. That probably wouldn't buy you a really high-end coffee, right? So she made some changes, a new budget, she's able to save a good deal more money than just the $7. But ultimately, she's gaining a $239 improvement in her savings and reaching her goals. So with chapter 3, we're going to be talking about the saving and investing. Or the quote, "Take the power of the compound interest seriously and then save." That's from the authors of the Getting Rich in America. The key, though, overall, this is the investment pyramid. We're really looking at the key, the foundation. And the foundation is this purple portion down at the bottom. The investment pyramid, important takeaway is the foundation, the purple part. Because you get into investing, it really comes into how much risk do you want to take. But you gotta have a solid foundation before you build on anything. Take the building analogy. So what's included in a strong financial foundation? Well, we want to know what our net worth is, right? We need to set goals. We need to make a budget. We need to have our financial records in order. Our financial records mean that you have your records organized and that you keep the paper that you need organized and to keep, and then you shred everything else. You shred the paper that you don't need to keep. And there's a lot of ways that you can do these things. There are a lot of apps where you can scan your bills and your receipts. A lot of tools now. Don't have to necessarily keep tons and tons and tons of physical files anymore. With online billing, it's all at your fingertips. And there's a lot of ways to do it. Some savings can be as simple, and savings on time can be as simple as putting your payments on automatic. That can save you on some paperwork that you don't have to keep up with. Now, one of my colleagues uses an app called Prism. And this Prism app connects to all the billers and accounts, and it notifies a person when a bill is coming due, lets you know when it's payday. And so you can track your money where it's going and that your bills are getting paid on time. So some of those financial records that you want to keep, those are going to include your standards, right? Income taxes. You want to keep a copy of your tax receipts and tax forms, just in case, right? Checking your credit report every year, just so you can watch for identity theft and keep your credit in good shape. And we'll talk about a little bit more in a moment. So really important to keep that strong foundation before you start investing in higher risk, higher return investments like stocks. Other important elements to your foundation are your insurance policies for peace of mind. You got your life, health, disability, and your property and liability insurance. That balances out the other side of your financial foundation of your goals, your budget, keeping your financial records in order where you can lay your hands on things and knowing what your net worth is. That's the protecting all of that, protecting you, protecting property. So things to consider beyond your foundation, and as we were, wrong way, looking at that pyramid again. If you're going to go beyond your foundation and you're going to go start climbing the pyramid, things to consider: your financial goals, your time horizon, your financial risk tolerance, and your inflation risk. The first layer above the foundation, that's money that you might be needed within the next 3 years. It's money you're not going to want to take much risk on. So you want this to be in an FDIC insured savings account, or savings bonds, MyRA account, or some other account where you can get to it if you need it in an emergency. These insured accounts are less risk, but at the same time, the return is lower. For your long-term savings, you've built up some wealth, you're good on your short-term goals, some of your long-term goals, you might want to invest in a little higher risk that'll potentially get you a higher return. But this is really, now we're getting in squarely into territory where you need to talk to investment advisor, financial advisor, planner, and really gets into the realm, start making deposits into your retirement account, your 401k, if your employer offers one. But we're not giving investment advice. We're just saying, do your homework before you do. So some reasons for using a mainstream financial services: it'll save you money on check cashing. Because banks will, if you're don't have an account at a financial institution, a bank or a credit union, they're likely to charge a fee to cash your check or to make money orders that you might perhaps use to pay bills. I'm assuming that may be still possible because you can still get money orders. It keeps your money safe. Because that FDIC, that Federal Deposit Insurance Corporation, insures money up to $250,000. So that's how it keeps your money safe. If you're also the NCUA, which I failed to note what that stands for, is the same kind of deal for credit unions as the FDIC is for banks. But I'm sorry, I totally forgot to look that up and see what that stood for. My bad. But it's very similar, similar kind of deal. You want to monitor your balance online, which there's a lot of tools for banks to provide online banking nowadays. A lot simpler than it used to be. And then you can access your money from anywhere. Through your app, you can, move money between accounts. Wife and I keep an account for an appliance fund should our refrigerator completely die on us, or our microwave goes poof. We don't have to worry about going to the bank to buying the money or writing a check out of a checking account or something like that, or putting it on credit. We have money that is already set aside because enough appliances have died in our lifetime being married that we know something else is going to go poof, and we set money aside for it. We learned the hard way early in our marriage. So that was a goal for us, right? And kind of tying it back into the earlier material. We wanted to have that emergency fund. We didn't want to be caught having to buy a washer and dryer again as a young married couple and have to pay on credit and pay a lot more over time than if we were just able to buy the appliance outright. But that also, using a mainstream financial service, a bank or a credit union, that helps you build a relationship. And that can have an important impact on your credit history. And we'll talk about that coming up. So employee benefits can also be very valuable to your bottom line and your net worth. As you're looking, maybe exploring new jobs, exploring advancing within your current job, maybe going from part-time to full-time employment with a company, it's always spend some time looking at what the compensation package is. What's included in health insurance? What's included with life insurance? A 401k perhaps. Actually, some corporations offer pet insurance. That would have been very helpful in one point in our life when we had a problem child, fuzzy child, who was always going to the vet for something. stupid dog would get stung by bees and his head would swell up. He was always doing something stupid. So some pet insurance might have been really helpful at that time in our life. They offer some flexible spending accounts, help pay for medical expenditures, prescription drugs, health products, contact solutions, you name it. And some companies might offer discounted bus passes if there's public transit in an area. All of those are important things to consider also when you're looking at your net worth and studying your expenses. So some other investments that you can make, you can invest in your home. You can pay a higher monthly payment on your mortgage to gain more home equity. For instance, maybe take a 15-year mortgage rather than a traditional 30-year mortgage. You'll be paying higher per month, but ultimately you're going to be saving potentially thousands of dollars in the long run by taking a shorter 15-year mortgage than the 30-year mortgage. And if you're not already aware, just for clarity, home equity in this case is the difference between the market value of your house and the balance on one's mortgage. An example of one of the characters, David, he decided he was really, one of his goals was start his own business. And that too can be a good investment. If you've got skills that you can use to make money, you've got certifications in electrical work or plumbing or carpentry or computers. Those are things that you can do to start your own business and make money. And you can invest in your own business as part of your wealth creation plan. It takes the planning, takes the know-how, takes a little bit of savings, and you have to have that entrepreneurial spirit. So some basic tips for investing. Again, I'm gonna say really for in-depth conversations, contact them and secure a financial planner to really answer a lot of questions for you. These are some basic tips. Find good information to help you make those informed decisions. You can do that because like in Texas, the State Securities Board provides an easy way to check out your financial professionals before you invest. Most of the people who are victims of financial fraud and scams wouldn't have ever invested with anybody if they took the time, or some people, if they took the time to check out the so-called financial professional before they invested. They would have probably learned that either the person wasn't even registered in the state, or in many cases, they were already under investigation or had already been charged with violations. Some even had a criminal record. So every state has a state securities board with certified financial planners are registered with, and you can check them out. You can find out. Know before you spend your hard-earned savings with them. And doing this, checking on all this through each state security board, it's a service that's free to the consumer. It doesn't cost you a thing to go through their records and search your financial advisor that you're looking to invest with, to do business with. Anyone who sells any kind of investment in Texas, for example, whether they're based here or not, are required to be registered here. So even if they're an out-of-state advisor, they have to register in the state of Texas. And the state of Texas Securities Board checks their background in a national database, and it verifies that their credentials are up to date. Because you don't want to invest with somebody that they don't even have up to date credentials. So with chapter 4, we're talking about the building your credit and debt control. And I'm sorry, I think it's just a wonderful sense of humor that the Federal Reserve Bank would choose a Mad Magazine quote. But it's kind of fitting. The only reason a great many American families don't own an elephant is they have never been offered an elephant for $1 down in easy weekly payments. I just think that's hilarious. Because I can see that. I've had family members that would probably do that. They would own an elephant for $1 down in easy weekly payments if they could. Don't know what they would do with it. So we talked about budgeting. We talked about saving. We talked about investing to build your wealth. But what do you do to build your credit? Because that's kind of a necessary component in a lot of realms if you're looking to buy the house, get better terms on your car, or a new car, or a new used car. How do you build your credit? Well, the important first step is to know what's on your credit report. And you need to know that now. You really need to know that. Even if you haven't used credit in the past, you might have information on your credit report, and it is possible that it might be incorrect. Your credit report shows everything about your payment history, including your late payments. And lenders use these credit reports and your credit scores and other information such as your employment history and income history when they're making decisions to extend you credit to purchase a car or a house or invest in your, a business line of credit. So what are ways you can make sure that you have a payment history if you haven't used credit before? Well, one of my colleagues has a personal example that she has used in the past to build up credit. She will use, she'll pay for her gas for her car and her toll tag on a credit card. And then she'll pay it down or completely pay it off every month. And just those items will she put on her credit card. And that helps create a payment history. And it helps her utilize the credit card without spending an excessive amount of money. So it shows that she's using credit, she's being responsible, she's paying her bills. That will reflect positively on the report, on the credit report. So in finding out, how do you find out what's on your credit report, right? That's the big question. Because consumers have a right to receive an annual free copy of their credit report from each of the major credit reporting companies. So we've got Equifax, Experian, and TransUnion. So reviewing your current credit report is an action step that you can take this year. And that's something that you can use to put in motion, taking action to reach your goals. Now, I will note here that a website, the three major credit reporting companies as examples here are each typically have the same information because most creditors report to all three. But I will say in here, and we can put this in the chat, The www.annualcreditreport.com is the only legitimate source for your free credit reports. And this is authorized by federal law. So www.annualcreditreport.com, that's all spelled out with no spaces. That's the legitimate source where you can get your annual credit report. Because many times when I've gone to some of these others, the three principals, they want to charge you a fee for them. I've not been successful in talking them out of a free report. Also, you may have, if you have online banking, you may have noticed that perhaps your bank offers a FICO score. And you probably have seen the advertisements maybe for myfico.com, FICO. And the FICO scores are used by many financial institutions and lenders, and a lot of your banks may offer a free score if you have an account with them. Another reason to go with a mainstream financial institution. And I'm sorry, I forgot to note here what the FICO stands for. So remember the definition of your net worth or your wealth, right? Assets minus liabilities equals net worth. Your liabilities are debts. Debts reduce net worth. And that any interest paid on debt is not invested or saved, so it's gone. So in knowing your score, what is a credit score? We've talked about it, you've heard about it, but we really like, so what does that mean? So basically a credit score is a statistically generated number that's representing the likelihood that you will repay on time. The higher the score, the less risk you represent to the lender. And so your credit report is used to build your credit score. And generally, like I had mentioned, a credit score is not free, but some banks and credit companies do provide free credit scores as part of their account service. And it's a good idea to check your score before you apply for a loan to find out if your score is eligible for the best interest rate as you're researching through, and to make sure your information is accurate, because there can be errors. You want to make sure that your score is accurate based on the information on your report, and that it is actually you and some other person's information. I have read where somebody with a similar name, just as a clerical error, somebody coded something incorrectly, and there was some incorrect information was reported to a credit report. So you want to get that cleared up before you go apply for a loan. You want to get all that clear. So the Federal Reserve Board of Governors publishes a guide, and there's also great information on ftc.gov website. So if you actually have something that's incorrect on your credit report, they have samples of a dispute letter that you can send when you find a mistake on your credit report. And that's on the ftc.gov website. So building credit, and very important. That's a very important tool to reaching your goals, short-term and long-term. Credit will help out when you're looking at your student loans. But once you know your score, there are ways to improve or repair damaged credit, if that's what turns up on your report. Or you may just be establishing credit for the first time. We'll note that recent credit history is more important on your credit score than old credit history. I noticed that our score had dipped. Oh, this was, last I looked was last year, that I noticed in how, because it's all part of a whole bunch of stuff that's kind of like behind an opaque black box. You can't really see what all they use to calculate it. But I noticed that our score had dropped a little. And one of the things that I noticed was our score dropped slightly from what it had been because I paid off all our credit cards. And the score dropped, which is this counterintuitive. It dropped because I wasn't using as much credit. The example that the bank gave under the little FAQ section, frequently asked questions, was that if you kept a running balance and used more of your available credit and paid it off and never exceeded or apparently never paid it off, your score would be higher. It seemed so counterintuitive. So ask your banker, ask your financial planner, ask questions, research it. I thought that was rather counterintuitive. But if you're trying to build credit, starting off, so you're just out of high school or just out of college and hadn't had a credit card, probably might have difficulty getting some loans to build credit, because you got to have credit history to get credit. I know it's kind of it's kind of that catch-22. But a secured credit card, I didn't know about this till looking through this material when we first started doing this process. I wasn't aware of a secured credit card, and I'm now amazed at what a useful tool this could be. So a secured credit card might be a good idea for building credit. A secured credit card would require a deposit, usually equal to that credit limit of the card. And then after 6 months, or maybe a year at most, goes by, the secured card company will return your deposit, and your secured card becomes a regular credit card. Now, some people might confuse these with a prepaid card, but prepaid cards do not build credit. They don't report anything. You're putting money onto the card. With a secured credit card, you're putting up upfront money, a deposit for what your credit limit might be. And then that company realizes over that period of time, whatever it is, 6 months to a year, that you're being responsible, you're not exceeding your credit limit, you're paying your bills on time, and you'll turn that to a regular credit, and you get your deposit back. Just make sure that they are reporting that to one of the 3 credit bureaus, because you want that to positively impact and show a credit history. Another type of starter account could be a retail store card or a gas card. Just make sure, again, that the card provider reports the payments to the credit reporting company. So knowing your credit is a good tool to have, but always ask yourself if you're ready to take on a new credit obligation. This example here shows the two of the characters. It shows Vince and Sonya with a big television sale, right? Each of them is going to buy a television at this sale. Sonya's paying cash because she's budgeted, she's saved this is within her budget. She can realize her short-term goal. We're just assuming to buy this big television big television. If you can see Vince, he's got a credit card in his hand. He's going to put it on. In fact, he's got multiple credit cards spread out there. He's gonna have this TV. He's going to buy it, and he's putting it on multiple cards because he's going to get it now. Well, he didn't budget. Doesn't look like, right? She's going to get the cheaper deal because she's paying cash at that sale price. She budgeted, she planned. Vince, he's going to be paying multiple cards, multiple interest rates, and he's going to be ultimately paying much more money for that same television than Sonya did for making a few simple choices. So, oops. So Vince, as part of this scenario, he made a chart of his actual account balances, interest rates and monthly interest for each credit card. So on the surface, we're looking at that and we're making an assumption call that he didn't plan. It's possible he planned. But he did. He looked, he charted his account balances, his interest rates, his monthly interest for each card. He checked his credit score. He shot for the best rate on a new credit card before he transferred all his balances to that card. And then he cut up all his old cards and he used that interest saved to pay down his principal balance sooner. So he used another technique to cancel out and get his higher interest rate cards paid off, transferring his balances to that one card, and then he was able to pay it off. So that's another path that was taken. All of us have an occasional financial emergency, right? We all do. And I had mentioned, the washing machine breaks. Your car needs new tires. The car needs to be replaced or retired completely. So there's some warnings about high cost credit and predatory lenders. That's why we said stay with mainstream financial institutions. Because you see a lot of advertisements all over the place, radio, TV, payday loans, high cost credit when you really start looking at the numbers, and just outright scams and identity theft. Payday advance loans, what many people don't realize, and many folks, as the studies were showing, don't have that emergency savings. And they don't have the credit available on a credit card to pay for those emergency expenses. Or they don't have a family member or friends that they could go to for a personal loan. So they naturally think that their only alternative is one of these payday advance loans that you see so frequently on advertisements. But they don't realize how many extra fees come with that. Much, much higher interest rate, double-digit interest rates. And then they tend to get out of control, and you get deeper in debt when you don't pay them in full on time. So they can be very problematic. And these often target, a lot of times, these target senior adults, low-income people, by phone, mail, or in person. They're really kind of high pressure. Yeah, this will do it for you. But they're very high interest rates and excessive fees on a lot of these too good to be true things. Also note, beware of credit repair services that claim they can erase your bad credit. Because really, if it's too good, sounds too good to be true, it's probably a scam. In guarding your identity to identity theft, never give out personal information over the phone, through the mail, or the internet. Especially an unsolicited phone call that claims to be from an agency that you may or may not have done business with or heard of. I think a frequent one of these over the years has been those IRS, the IRS is sending officers to your house now, unless you call us. Well, it perplexed my wife years back and made her nervous. And so she called the IRS direct, talked to a wonderful IRS agent who informed her the IRS makes no telephone calls. Any official information would be sent out through the mail. So all of those were scam calls, trying to scare people into giving out personal information. Some personal identifying information that they could use for identity theft or to access your accounts, basically steal from you and damage whatever hard-earned savings you've collected, or damaging your credit, which is very, very difficult to climb back out of when that happens. That's why it's very important to shred or destroy all your old bank and credit card statements and any private records, rather than tossing them in the trash. And then only give your Social Security number when it's absolutely necessary. So let's make it a goal. Be prepared for emergencies. Find ways to build an emergency savings, nest egg, and build your credit. Research shows that emergency savings of as little as $500 can remove the need for most consumers to even go to one of those payday lenders. So building an emergency savings is a good first step to building wealth action plan. And I will note here that as of it began back in September of 2018, brought to us by a new federal law, you can have a free credit freeze available, where you can freeze and unfreeze for free. And it's also available, it has year-long fraud alerts. So if you're a parent that may have a teenager, college student that's a little undisciplined with the emergency credit card, let's say, or a senior adult, you can freeze your credit where people can't access, other than you, can't access your credit reports and your credit information, which, so I've read, helps cut down on some of your scam calls, because they're trying to access that a little bit of information and trying to trick you into giving out information that they can then use to make money or steal your money. So in protecting your wealth, as the quote says, it's unwise to be too sure of one's own wisdom. It is healthy to be reminded that the strongest might weaken and the wisest might err. And that was by Gandhi. So building wealth just covers the basics of insurance, including renters and homeowners, auto, and of course, health insurance. A good action step to take every year is just to review your property and auto insurance coverage, your deductibles and your premiums, because things change, information changes. Occasionally I get notices, I'm assuming many people do, from their insurance providers to changes in premiums and how they could save us money, especially if you have an older vehicle. there's information. Talk with your providers. And you might just want to shop around. You might be able to save on a monthly premium without taking too much additional risk by looking at some different insurance providers. So the insurance basics, the deductible is the amount you pay out of pocket before the insurance kicks in. I think many people are familiar with this, hopefully. Your insurance premium is the cost of the policy, right? So insurance is an important part of your financial foundation. That's that counterbalance to all your budgeting and your goals and your planning and your organization of your finances. So your insurance will help protect your wealth and assets. And there are all sorts of different types of insurance for yourself and your property. So auto insurance, you must have liability insurance at a minimum to cover injury to other people and damage to their property. And if you have a car loan, you might be required to have physical damage coverage. It just depends. Home and renter's insurance to protect your home and possessions in the event of fire or theft. Additional insurance may be required to cover flood, earthquake, etc. I know when we had an apartment, we used to have renter's insurance. It was a really good peace of mind because you never know what happens. And it was pretty good and pretty affordable. Very affordable, I would say, at the time when I had it as a mere kid just out of college and first apartment. Yeah, it was. I had insurance, and it was doable, and gave you the peace of mind. You never know if you're in an apartment and the upstairs neighbor's puppy was left in the bathroom while they went to work and turned on the faucet in the tub, and the tub overflows and water flows everywhere down into your apartment, ruining everything. Yeah, it's good to have. You never know what happens. Because that sounds like a made up story. That actually happened to somebody my wife knows. Home warranties. That's an annual service contract that covers repair and replacement of important appliances and systems, components that break down over time, your heating, AC, plumbing. Those can be beneficial and give you some peace of mind. Other types of insurance, of course, are your medical, your health insurance. Tied to that is a flexible spending account. So you should always consider your budget when you're completing your annual enrollment in your employer's plan selections. Kind of goes back to that beginning part. If you're enrolling in the healthcare, well, that doesn't count. That may or may not still be, the marketplace may or may not be open. You want to find a health plan with the lowest premium. May not, or what people typically look at, I guess, is looking for that healthcare plan at the lowest premium, but that might not be the best deal. You might want to kind of shop around and look at it. Just because it was the lowest price, it may not cover some things that you need it to cover. The situations arise totally dependent on your family situation. But besides the health and medical insurance and the FSA, you've got disability insurance, of course. It helps you if you're sick or injured, unable to work for a long time. Something to consider if you're in a high-risk work environment. Life insurance, in the event that your death, life insurance pays money to the person of your choice, your beneficiary. So if you pass away upon your death, your family gets something that can help sustain them. Long-term health care insurance. Long-term care insurance pays for health-related things like the nursing home, assisted living, in-home care. But it's just important that all types of insurance are made to help protect the wealth you have accumulated. If you didn't have insurance, you would be paying out of pocket for everything. And that would really deplete savings pretty quickly, or it could. So now we've gotten through an overview of the building wealth. Has any of your definitions of wealth changed? Are your financial goals the same, or do you have new ones? What are some of the strategies you're willing to take? And what are some of your next steps? Some things to think on. Are there any questions, comments at this juncture? I appreciate y'all attending. No questions?
I'm not seeing any right now.
Okay, well, we appreciate y'all attending. Feel free to drop some information, questions in the chat if you still have any. And we appreciate y'all attending today.
The recording will be available on our YouTube page. I had the link posted up higher on the chat. I'll put it back down here, but
Yes,
that's where
thank
you'll
you.
be able to access it after the presentation's done.
Yeah, give us about a week or so, at least a week, and we'll have the recording posted up online. We'll give it another minute, and then we will exit.
We had one question come
Oh,
through just
certainly.
now. Oh,
Certainly.
they said if the insurance or warranty company closes down, where would they complain or access them?
Oh, that's a very good question. I'm afraid I have no idea on that one. I am not an expert on that one, so that I have no idea. Might have to, I'm wondering if there's a state agency. I wonder if there's a state agency that oversees that might have information on that, like the insurance commissioner or something. If the state has an insurance commissioner, I don't know what the office would be for Texas. I'm afraid. Sorry, I'm a transplant. I don't know all the state offices.
It looks like there is a Texas Department of Insurance, so I will put that link in the comments. It might give you information about what you can do, but it looks like they do have a customer service number that you could contact about it.
Yeah, that sounds good. That would be my best suggestion. I know I've heard of that happening. I just personally have, luckily, knock on wood, have not had that happen yet. All right, well, we're gonna wrap it up. If you're through typing, looks like something else popped in.
I think that's all the questions we had.
All right, well, thanks everybody. We're gonna be wrapping it up. Y'all have a good rest of y'all's afternoon.